Uday, a question for you is, how do you see the dynamic now, if we had to talk about the sanctions, and do you still see ethane being exported at the same level or more, or how do you see those trade flows for feedstocks?
Yeah, I mean, I think it's a complex question, and frankly speaking, I'm not sure. I mean, we've been doing a lot of research in this space, and I'm not sure we understand what's happening.
No.
But I mean, I can lay out a few things, right? So historically, the U.S. has purchased a lot of gasoline from Europe. Historically, the U.S. has sold a lot of diesel to Europe. The general expectation is that a lot of Russian refineries are not high complexity refineries, and therefore tend to export a lot of intermediates, in particular diesel stock intermediates, right, into European refineries. I think some of that is going to stop, right? It hasn't quite fallen off as much as one would have expected, but we expect further declines here going forward, right? So what does that mean, right? That means that Europe, which is a diesel-intensive economy, is going to be starved of feedstock to make diesel. And so US, there'll be, I guess, a greater draw on diesel exports from the US, right? To what extent are US refineries ready to be able to supply that incremental diesel without using those intermediate, because the US also will need some of those intermediate diesel blend stocks, right? Without getting them from Russia, obviously. So, there's probably some room for the US to export more diesel, but my expectation, and I guess our expectation, is that a lot of the there'll be a significant decline in Russian diesel exports, in diesel blend stock exports. There'll be a lot of that, whatever is exported is probably going to end up in Asia, and Asian refineries will be converting it into diesel and exporting it back into the European markets, right? So I guess I don't see that having a big impact on the relative dynamics in terms of ethylene feedstocks, right? I think the world has gotten comfortable with importing ethane from the US. They would like to import more. I mean, the only impact that I could see is that some of the gas oil that might have been ending up in ethylene crackers probably now ends up in hydrocrackers to make diesel as opposed to make petrochemical feedstocks, which means a greater draw on ethane exports from the US, right? It's a complex thing, right? But that is how that's like a framework, if you will.
So, Joe, talking about sustainability, do you see any impacts of sustainability measures that the companies are taking, or bio-based feedstocks on the overall aromatics market?
Well, the sustainability somewhat is a misnomer, because they're co-opting that word sustainability, meaning you can keep at a certain pace using resources or some effect on the environment. Bio feedstocks, you can take bio feedstocks. The chemist can take almost any molecule, convert one to another, but you cannot really do that very economical. So anything we're doing along these lines are contrived, and they're supported by a market pull by the consumers demanding this, or tax incentives, or governments. The cost is always going to be much higher, so it just depends on how much higher. In the case of green hydrogen, you're 5 times higher. In the case of CO2 capture from the flue gas, you're 30-40% higher. Bio feedstocks have been used to make aromatics, but lot of publicity, a lot of magazine articles and reports, and a lot of attention on that, but the quantity is very tiny, and it'll stay very low unless there's a price differential that comes out somehow to compel people to move in that direction. Otherwise, it's not economical to make aromatics from the bio sources.
You spoke about the diesel, and we know in the future most of the European countries will ban diesel cars, and most of them are moving into electrical car. What's going to happen to the diesel refining capabilities? Is it possible to use it for any other material?
Good question. Trying to think if demand for diesel fell, what would you use the hydro? I mean, conceptually, you could, I guess you could use hydrocrackers to make more naphtha, make more lighter feedstock, right? You essentially operate your hydrocrackers at higher severity to make more of the lighter stocks, and then put them into ethylene crackers and make more petrochemical feedstocks, right? I mean, we talked a little bit about crude oil to chemicals earlier. I mean, if you look at the crude oil to chemical configurations, a lot of them is essentially high severity hydrocracking, right? I mean, there are a couple of other technologies as well, but I think that's really what I see as the most logical play in terms of using the existing diesel production kit, if you will, to make if diesel demand falls, how do you repurpose existing diesel focused refining capacity? That's probably where we would focus on.
The diesel is also used as bunker fuel for the ships because it's easier to desulfurize that. So there are other demands for diesel coming up.
So I had a question on the pricing. Do you see a major impact of whatever natural gas or LNG pricing that we are seeing? Do you see an impact of that in ability of the US to, say, retrieve or reject more ethane, and how do you see that impacting ethane exports? Or do you see it mainly be driven by existing long-term ethane export agreements?
Yeah, I mean, so as you build more ethylene cracking capacity, right? These guys are the ethylene crackers are entering into long-term contracts essentially with the midstream fractionators, saying that you're going to supply us so much volume, right? So if you have X barrels per day of NGL production capacity, a certain fraction of that with each incremental ethylene cracker is getting contracted out that you will have to extract out of Y-grade NGLs and send it to the ethylene crackers, irrespective of what the pricing for ethane or natural gas is, right? But there's obviously going to be quite a big chunk which is subject to the price dynamic, with the price difference between ethane and natural gas. If the price difference if ethane is not is sufficiently expensive than natural gas, that people will keep rejecting it into the natural gas stream and it gets burnt and consumed as natural gas, right? So what has been surprising is how much NGLs the US has been producing, right? And the general expectation, you're a petroleum engineer, the gas oil ratio just keeps rising over time. So the general expectation is that we'll keep producing more lighter fluids as the shale wells mature. So the general expectation is that there'll be more NGL production going forward, which means that there'll be, I know that our forecast says that ethane rejection is going to keep going down because as new capacity comes on stream. But if NGL production climbs faster than the pace at which new ethylene cracking capacity or ethylene export capacity is rising, at some point you'll see ethane prices fall, and then probably our forecast probably is not as it might change, right? We might say that, okay, there's probably more ethane that is being rejected. But that at a high level is the broad pricing dynamics, right? I think broadly speaking, the petrochemical companies, right, they spend a lot of time thinking about what's happening to the outlook for ethane pricing. And the fact that they are adding capacity tells me that they have gotten comfortable that the US has a lot of ethane, a lot of that ethane is going to be available at fairly cost competitive prices and so on.
So looking at the pricing right now, which is fairly, or maybe a couple of months ago, which was fairly high, was there a hesitation in renewal of those contracts and would that be a diminishing factor in terms of long-term ethane takeaway capacity, or is that moderated, or is that does not play?
Yeah, I mean, so I think there was some talk probably last summer when I think operators were saying that natural gas prices are now so high that we're going to stop flaring, so it's possible that some people thought that, you know what, if somebody was extracting ethane on a speculative basis, right, not because they have an existing contract, but because they thought that the ethane prices will be high enough and it makes more sense for me to extract it as opposed to just reject it, it's possible that some of them might have rejected ethane at that point of time because natural gas prices are $5, $6, $7, and they thought, well, it's not worth it, right? The price differential between ethane and natural gas has to be sufficient to justify as Joe was saying, the cost of picking that ethane out of that stream. And if natural gas prices are high, probably it becomes harder to do that unless you have contracts or unless ethane prices also rise accordingly.